Hi, it's Dre Griggs of the Sitting Wisdom. Today we answer the question, how much money do I need to invest to build $1 million portfolio? I'm going to show you today how to generate $1 million portfolio using the stock market and show you how much money that you need to invest based on just how you feel overall. We're going to take the average return that the stock market has had over its lifetime, and that's about 10%, it's like 9.77. We're just going to go ahead and say 10% to keep it nice and easy for us. And we're going to show you how much money that you'll need. If you find value in this video, I ask you to go to yourfirststocks.com and register for our free 5-day investing challenge where I'll show you step by step how to build your own investment portfolio so that you can achieve financial freedom through stock market investing. If you are someone who plans on retiring in 5 years versus someone who plans on retiring in 45 years, it changes the amount of money that you need, obviously. But I will go over that amount. So for 45 years, so if you're someone who is maybe 15, 20 years old, and you say, you know what, I love the work that I'm going to do. I have no desire to retire anytime early. I just want to make sure that I have the nest egg set aside in case something changes. So if you're comfortable with your work and you just want to be able to retire comfortably in 45 years, based on a 10% return, you would put about $5 a day into the stocks, which is about $150 a month or $1,800 a year. If you do that, then you will have contributed, which means you will have invested a total of $81,000 over the 5 years. And yes, you will end up with $1.3 million. So that means the $81,000 that you invested, you will have generated a return of that 10% each year over 45 years of $1.28 million, which is fantastic. That basically means like over 90% of your portfolio is just the return on your money working and not you working. If you want to be done in 40 years, then the number goes up a little bit. You're going to invest $7 a day, which is about $200 a month, which means you put in about $2,400 in the year. On this situation, you will have invested $96,000, and that will generate you in 40 years of a 10% return, $1 million. So your overall portfolio is going to be about 1.1 million, which again means that over 90% of your portfolio of you having the $1 million is the result of you being able to say my money worked and not me. It's a beautiful feeling. The big thing I'm trying to show you is if you leave your money in over the long term, even if you've already retired, halfway through or whatever, you will see that the money is going to work for you. Also, something as simple as $5 or $7 a day, if you leave the money invested in the stock market, compounding over time, yes, the market goes up and yes, the market goes down, but historically over its entire existence, it has generated that 10% return. So it's not crazy to say that you will have a 10% return over that 40 years. You will be a millionaire. If you're looking to retire in 35 years, so let's say, you know what, the average person retires at 65, Dre, and the average person, I don't know if you know, about 60% of people are retiring with what they consider broke, which just means they have $5,000 or less set aside in their investments, where they're going to be living majority off of Social Security. So I just want to say that don't act like $1 million isn't a good amount of money, because the majority of people are not going to have $1 million in their portfolio. And don't tell me, well, Dre, 45 years, that's too long, when 75% of Americans are living paycheck to paycheck, and something like 80% of Americans don't have $1,000 set aside for an emergency, to where you are sitting here with $1 million in your portfolio. So, don't act like, oh, well, that's too long, Dre. I don't want $1 million that way. Because the majority of people can't figure out how to get $1,000 for an emergency. And half of it is because most people are looking for something that's going to happen overnight, and they're walking past free money, right? Like if $100 was on the ground, would you walk past and be like, it's only $100, that's nothing. I'd pick it up. Would you walk past $1 on the ground? If there's $1 on the ground, would you be like, it's only $1, no big deal, I'm going to walk past it? I would pick up $1. My dad would pick up, he'd pick up pennies, and I don't know if I pick up a penny, but I generally don't walk past money. I show an appreciation, a gratitude, like thank you, and I usually pick it up to show my gratitude. But most people, when it comes to investment strategies, they're like, well, look, Dre, if I can't get $1 million in 12 months, then I don't want to do it. Well, I know many people that get $1 million in 12 months. I think it's something like 20% of the population is considered a millionaire. I mean, it's not a lot of people, but everybody's acting like you could just become a millionaire overnight. And sure, if you have like a business, sure, why not? And then some people say, well, Dre, I'm going to go into real estate, and that's fine. But the barrier of entry to get into real estate is much higher, where you need a lot more money. You can put $5 in the stock market and work on getting your return, but you can't put $5 into buying a property. You have to have usually that 20% to be able to do that. And yes, you're right that once you get the 20% down, that you now have the other 80% of the property's value, that when you sell it, you have that additional amount. That's totally true, that you're leveraging your money. But it's also true that it takes more money to be able to do that. Now, granted, I'm cool where people are like, you know what, I'm going to start building my money, getting better returns in real estate over the next 5 years, but I'm going to start in the stock market. By starting in the stock market, now I'm getting better than the 0.001% return that my bank is giving me, and I'm getting like a 10% return every year on my money. And then I'm able to put that money in real estate and get, I don't know, 20%, 30% return, where you're maximizing your money, where you're creating multiple streams of income. And if you've ever seen any of the information I put out, I tell you that the IRS lays it clean for us. It tells us that 65% of millionaires have at least 3 streams of income. And about 85% of the money invested in the stock market is the top 1% of our population. So what did they know that the rest of us don't know? And if you didn't know, the bottom 50% of our population, they invest less than 5% of the money in our stock market. Bottom 50% invest less than 5%. And it may be 1%, it may be like 5%, where the top 1 or the top 5% of people, they have around like 90% of the money that's in the stock market. So what is it that the wealthy know, where they're putting their money in the stock market, that the rest of the population doesn't? And so you just want to be able to keep that in mind. So if you're looking to be done in 30 years, so you said 20 to 50, which most people are not retiring at 50, but let's say you did it. Or even if you did 30 to 60, let's say you got a late start. Even if you did 40 to 70, sure, why not? Then you would only have to do $17 a day, which is about $500 a month or about $6,000 a year. You will have put in $180,000 over your lifetime in the stock market. And the stock market will have given you about an $860,000 return, which again puts you at the $1 million. Now you're seeing that the number for the amount that you're putting in and the amount that your money is growing is shifting. And so as I go through this, you're going to see that at some point it's going to be where you're putting in the majority of the money and you're getting a much smaller return depending on the time frame. Now, what I will say is if you're able to invest more and also leave it in for the longer period of time, well, now you're generating tens of millions of dollars instead of just generating the first $1 million. If you're someone who wants to achieve financial freedom in 25 years, then you would invest your money about $28 a day, $825 a month, which will be around $9,900 each year. That overall means you put in $247,000 or about $250,000, and then your portfolio would have generated the other $780,000. So you put in $250, your portfolio generated $780. That was over 25 years. That again puts you at $1 million. If you only have 20 years before you want to achieve financial freedom, then you would put in about $50 a day, about $1,400 a month, or $16,800 a year. Again, these numbers aren't crazy. Like you may say, well, Dre, I can't do that now. But if you didn't have the overall debt and if you were introduced to this strategy early on, would it have been possible? And I would say it'd be much more likely than possible. It just becomes a strategy of shifting the way that your money is being allocated so that you can put it towards your financial freedom fund. But if you do it for 20 years, where you put in $16,800 each year, do that for 20 years, you'll put in $336,000 and you will have generated $670,000 in the stock market. Again, you've achieved a millionaire. 15 years, you put in $83 a day, about $2,500 a month, $30,000 a year. That's $450,000 that you invested. $550,000 is coming from the return on your money. So you see, now we're in the 15-year range, and everything below this, you're going to be putting in most of the money. So right now we're about 50-50. I put in about $450,000. It a little more than doubled for me, and so now I have the $1 million. Still a great return. You doubled your money. But in the 15 years, it's not the same as if you left your money in for the 40 years, where 98% of your portfolio was the return and you only put in such a small amount to achieve the overall return. And again, I just want to remind you, if you can invest a larger amount and leave it in for the longer period of time, now you're getting in the tens of millions of dollars that you would be generating. So just keep that in mind. If you want to retire in 10 years, You put in $167,000 a day. That's $5,000 a month or $60,000 a year. Again, that's like a salary. But if you're later on in life where you had kids and you had bills and student loans and different things, and you just want to catch up to where now you're at a point where maybe 55 to 65, you can invest this amount of money because you're higher up in the ladder. You don't have the same debt, but the house is almost paid off, things like that. Then $60,000 a year, $5,000 a month, that's $600,000 you put in, $400,000 is your return. 10 years, you have the $1 million, you're doing pretty good. If you only do it in 5 years, that's about $500 a day. About $14,000 you would do a month, and about $168,000 that you would invest every single year, which would be about $840,000 that you will have put into the stock market, and $240,000 is what the return would be. Now, granted, I kept it consistent at the 10% because that is what the stock market has averaged over its lifetime. If you are someone who has an investment strategy where you're only generating 5%, well, then you would have to put in more money to offset that. If you're someone who has an investment strategy that's generating 20%, well, then you can put in less money, or you can put in the same amount of money and get a greater return in your portfolio where you have more money set aside. You may be someone who wants to play around with the overall contributions to where maybe you started with the $5 a day just to start getting your money compounding. And as you got rid of debt, you put that money in the stock market. As your children grew and went on, you put that money in the stock market to where maybe you started at 5 and then you went up to 100, then 200, then 300, and you were able to keep growing your money. I find that most people, once you're able to see the money growing in your portfolio, I find that most people get very excited by that reality and they start investing more of their money inside. But if you want to achieve financial freedom through the stock market, you can start for as little as a cup of coffee, that $5 a day, $140 a month, and then you would be at about $1,800 a year. If you're able to commit to $2,000 every single year, you can become a millionaire. You can put this money together. And again, it's not like the majority of people, or even near the majority of people, are millionaires. Well over the majority of people are retiring today with $5,000 or less in their retirement account. 80% of people who are working are living paycheck to paycheck. And it's not that it's everyone's poor, it's that some people have a lot of money. I think I read a study that said about half of the people who make $100,000 a year are living paycheck to paycheck. And so you have a 6-figure job and you still are living paycheck to paycheck. If you can pay yourself first by investing the money in your future, then every time you put money in the stock market, you can buy one more day of your freedom. If that is something that sounds of interest to you, I invite you to come check out the Your First Stocks Challenge, which we will go over 5 days. And by the end of that 5 days, you will have a complete investment strategy and you will have purchased your first stock and you'll be on your way to the path of financial freedom through stock market investing. If that is of interest to you, I invite you to go to yourfirststocks.com and register for the free 5-day challenge today.